Okay, now we're going to talk about some key terms. First of all, the Medicare enrollment periods. The first one that you should be aware of, that I mentioned a couple times already, is the annual enrollment period. That's typically from October 15th to December 7th of every year, unless it gets changed in the future. And that is your time, if you are already on a plan, to make a change for the upcoming year. So it will be effective on January 1, any change you make during that time period, okay? This is the period where you really need to shop around, as I've been emphasizing throughout. There's another period called the open enrollment period. I refer to it as the OOPS period. This is the time where you can make a change after January 1st. If you feel like you've made a mistake, maybe you didn't shop around as thoroughly as you could have or should have. So you have the opportunity from January 1st through March 31st to make one change only within the Medicare Advantage world, or go back to original Medicare. Special enrollment periods. There's a laundry list of these periods where you can have an election during the given year or during the calendar year that's not tied to the annual election period. The biggest example of this is moving in and out of a service area. So if I moved across the country and relocated for retirement, I was in one service area, now I'm in another. The IRS will give you a special election period to sign up at that time in a new plan in your area. Another big example was going back to the very beginning, the employer coverage scenario. When I lose my employer coverage, if I deferred my election into Medicare at age 65 and say hypothetically now I'm 70 years old and I left my employer and my coverage is ending, I have a special election period to sign up for Medicare at that point in time. Some other key terms to keep in mind and to understand. Number one is the premium. What is the premium? The premium is how much you pay monthly for your care, for your plan, rather. So as I was going through my options, I was reinforcing option one, you'll have two premiums, the Medicare Part B and the prescription plan. And then option two, you'll have three premiums, etc. Those are fixed monthly costs that you're going to spend whether you step foot in a doctor's office or not. So I would look at them that way. Copay and coinsurance. Those two are very similar. They represent your share of the cost of medical service. They're just how they are stated is the difference. A copay is a fixed dollar amount. So for example, $4 for a prescription, that's a copay. $5 for a primary care office visit, that's a copay. Coinsurance is again your cost. It's just how it's stated. It's a percentage now instead of a fixed dollar amount. So it might be 20% for a diagnostic test. So whatever the Medicare approved cost for that is, it will be 20% would be your coinsurance, your share in that example. So they represent the same thing, it's just how they're applied and then end up in your contribution to the care. Deductible, we mentioned that a couple times throughout. Remember, quite simply, a deductible is what you pay before the insurance company starts to pay anything. There's another term that's similar to deductible in people's minds, but they're really not related, and that is this term, maximum out-of-pocket. For Medicare Advantage plans, they have what's called a maximum out-of-pocket amount. That is the maximum amount of money that you would be responsible for paying, and then the insurance company will take over everything from that point forward. So let's go back and reflect to that example I used a couple of times, where if I had $1 million accident and I was on original Medicare, it would trickle down 20% or 200 grand to me that I would be responsible for. If I was on a Medicare Advantage plan in that same example, I would have a maximum out-of-pocket number. They generally range from somewhere in the mid $3,000 range up to $7,000. So in that same example, I would be responsible for $3,000 to $7,000, not to $200,000. The other thing to remember with the maximum out-of-pocket term is it is not a deductible. It's not what you have to pay in advance before the insurance company pays. So if the number is $5,000, you don't have to pay $5,000 out of pocket before the insurance company pays. It's really the sum of all of your copay and coinsurance amounts. Once they meet that number, then the insurance company takes over. The donut hole or coverage gap, That's one of the payment stages in the Part D plans. Remember, they're all the same for all carriers. And that's where you're going to change from a copay amount that's tied to your plan to 25% of the cost of the drug, whether it be generic rather, or a brand name drug. And lastly, the income related monthly adjustment amount. Remember back to the chart I referred you to. If your income is within any of those ranges, you can see to the right on that chart how that will impact you in terms of your premium adjustment for both Medicare Part B and Medicare Part D.